So an anonymous trader just made a multi-million-dollar bet predicting gold's going to hit $20,000 this year. And this is leading many people to wonder.
Price of gold
closing above $4,000.
Reaching heights it has never seen.
Is gold's recent 100% rally just another rally? Or is it a sign that maybe some sophisticated traders know that a gold and silver revaluation could be coming? I know that sounds a little bit crazy, but let's not forget what Scott Bessent said about this. So there's two really interesting things about that clip from Scott Bessent. Firstly, that was from exactly 12 months ago, and you heard what he said.
Within the next 12 months, we're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work, and I think it's going to be very exciting.
We're going to monetize the asset side of the balance sheet in around 12 months. And this is leading many people to wonder, what would happen to my mortgage if gold was revalued to $20,000 a coin? What would happen to the banks? Would they even open? So those are all questions we're going to be exploring in detail today. And the reason why we need to explore them in detail, because this is a really strange story for lots of different reasons. First, America is one of the only countries in the world that still values its gold at $42 an ounce, despite the market price being over $5,000 a coin. And when the very own Federal Reserve is publishing white papers like they did in late 2025, openly talking about a gold revaluation, that is when we need to start paying attention. It's not just America needing a gold revaluation to offset all of the debt and the money that's being printed in their country. We can see lots of these big G7 countries, they need gold at much higher prices than where it is today to offset the amount of debt in the country. But before we look at what a gold revaluation might look like around the world, let's start with America, because like I said, they are the very interesting fringe case. So America is valuing the gold in its treasury right now today at $42 an ounce. And a lot of people are saying, Luke, why are you even talking about the idea of a gold revaluation? It sounds crazy, it sounds insane. But I'll remind you, America has actually revalued its debt multiple different times throughout history. After the US government confiscated all of the citizens' gold in 1933, the government went ahead and took the official price of gold from $20.67 and they revalued it by nearly 70% to $35 an ounce overnight. Literally overnight. And again, this was not the only time this has been done in American history. Gold got revalued twice in the early 1970s. In 1973, gold got revalued from that $35 up to $43.33. And now there's a lot of talk about another gold revaluation. Now, again, one of the reasons why I don't think it's so crazy that America would do this is the rest of the world, they are marking the gold on the central bank and the government's balance sheet at the market price. Today, it's $5,000 an ounce. And most governments and central banks are saying that is how much the gold in our treasury is worth, $5,000 an ounce. America is the exception to this scenario. But again, let's look at just where the price of gold could go if it were to be revalued higher. So America is sitting on somewhere around, it's about 8,000 metric tons of gold. This works out to be somewhere around 260 million troy ounces of gold, and valued at that $42 per ounce figure that America, for some reason, is still using. They've got somewhere around $10 or $11 billion worth of gold in Fort Knox, and that's if it actually exists in Fort Knox. There have been some rumors flying recently surrounding Island Boys email chains, and there's been some allegations stating that maybe the gold's not there, but let's just assume that it is all in Fort Knox for now. What would a revaluation look like? What would happen if America revalued its debt and started accounting for that gold, not at $42 an ounce, but at $5,000 an ounce? We can see America would be sitting on $1.3 trillion worth of gold if it just got revalued to the market price. But again, what happened in those previous revaluations? The market price of gold nearly doubled in some instances, like we saw in the 1930s. What if we saw the same thing? What if the market price of gold wasn't taken to $5,000, but $10,000. We can see that America would be sitting on about $2.6 trillion of gold. If gold was repriced to $15,000, all of a sudden America would be sitting on nearly $4 trillion of gold. And these numbers are really interesting to kind of keep in the back of your mind, because right now today, there's about $7 or $8 trillion of US treasuries held by foreigners. So raising the price of gold to $15,000 or $20,000 an ounce, this would theoretically extinguish a lot of the foreign obligations that the US government holds. And again, these numbers, I know they sound large, but lots of, very well-known people in the macroeconomic space, they've been talking about these numbers for years. Let's have a look at some of these predictions. Jim Rickards, he's been talking about this 40% gold backing of the money in America, and that would imply a gold price of somewhere around $10,000 to $11,000 per ounce. If America wanted to fully back its debt, you could see a gold price as high as $35,800. And then what's really interesting is Mike Maloney has this gold to money supply ratio that he talks about, and in this ratio, he predicts that gold would have to be somewhere around $14,000 to $18,000 per ounce to just back some of the money supply. Now, I actually found this really cool chart as well that looks at the ratio between the United States M2 money supply and the gold ratio. And we can see that right now we're at about, 50-year lows. We're approaching 50-year lows on this chart. So if gold were to simply revert back to those early 2000 highs, or even those early 1970s highs, we would be looking at a figure about 4 times higher of where we are today. So that would also imply a price tag of somewhere around $20,000 per ounce. Now again, those are massive predictions compared to where gold and silver are both today. Gold and silver have both had big runs. Some people have been saying that we just saw generational blow-off tops.
I was bullish gold and silver, all metals, calling for gold to go above 2000 in 2021, 2022, and 2023. I was the Mick idiot. Just could not get that one. It was not going up, and yet I kept saying the same thing every year. Finally, out of frustration, I wrote it again. 2024 finally went through.
Now, don't get me wrong, Mike could be right. So maybe gold and silver have put in generational tops. But again, I want to explore both sides of the story today. What if this is not just a normal rally? And what if this is just the early stages of a gold and silver commodity super cycle? We have seen many long, extended 10-year super cycles in commodities going back all throughout history. So what if we're in the early stages of one of those? Because again, let's not forget, so far, this rally in gold and silver, it's largely been driven by central banks. We can see for the first time in 40 years, central banks now hold more gold than they do treasuries on their balance sheet. We are living in the early stages of a sovereign debt crisis. Nobody wants to hold government bonds anymore. And again, just look at the chart of the US 20-year bonds, TLT, if you think I'm being a little bit inflammatory. That thing's down over 50% since 2020. It's very clear. Nobody wants to hold bonds because nobody believes that inflation is 2% anymore. Why hold a bond yielding 4% a year when real inflation is not 2%? It's much higher than 2%. This is what I believe we're seeing, which is why since 2008 in particular, when the money printers really got turned on and the amounts of printing per year kind of started to accelerate, we've seen this trend shift. We've seen central banks in the past 18 years buy more gold and silver than they bought between the years of 1980 and 2010. We're in a completely new regime, and this is maybe again why we could still be in. Again, what I kind of find super interesting about this new $3.3 million bet that we saw this week, predicting a $20,000 gold price this year, is I think we're beginning to see reasons for why traders might be taking such huge bets. So we can see that central banks have been buying a lot of gold for a decade. And it's only been recently that all of this continued supply suffocation and demand for the physical gold and silver, it's starting to wreak havoc on all of the markets. The CME went down literally today as I'm recording this video in the last couple of days of February. And we can also see that for the first time in a long time, China started adding to its public reserves of gold. So we know, we've been tracking this chart for years now. You can see if you look at China's gold imports, exports, and the amount that's mined in the country, we all know that China has more than 20,000 metric tons of gold in the country. But for a very long time, they kept their official holdings of gold somewhat steady. That's what this chart with the yellow bars shows. But more recently, China said, okay, enough's enough. We've quietly accumulated enough gold, and this is maybe what we're starting to see in the prediction markets. Because again, if you've bought as much physical gold as you possibly can, what do you do next? Well, you venture out into the futures market and you start making enormous bets like this. So we can see traders have put on a massive $3.3 million bet, predicting that the price of gold is going to hit somewhere between $15,000 and $20,000 this year in 2025. Again, let's look at the payoff. So again, let's put some caveats out there. This chart is just looking at the open interest. We don't know whether these calls are hedged with puts, but I think the volume here of the amount of calls that are being bought, it's a little bit of a warning signal that somebody's going long in a really big way. And if this trader is right, they could make something like 1,600% on their trade. So that means that that $3.3 million trade could turn into something near $6 billion. And think about this for a moment. If you're a retail trader, are you really just going to risk $3.3 million? Because if gold doesn't break $6,000, $7,000, or $8,000, and it just kind of chops sideways for the rest of the year, that trader loses $3.3 million. Those options expire worthless. So again, if somebody's going to make a $3.3 million bet, they've probably got a lot more than $3 million or maybe even $10 million of money sat in their back pockets. This makes me think, look, maybe central banks have bought as much gold as they can without letting the price fly. Maybe they're resorting to also placing massive bets in the options market because they're expecting price to go higher. Or maybe more interestingly, I should say, is maybe this is an insider. Maybe this is someone with $1 million or $2 million, and he said to a couple of his friends, hey, look, we know that gold is going to be revalued much higher. Let's make a massive bet. Look, I know that's wild speculation for now, but it's strange that you see $3 million bets in the options market. You don't normally see bets that large unless somebody knows something that most people don't. This kind of turns my attention to the global race for gold. And what would a gold revaluation look like in different countries? Again, let's not forget, countries like Japan and the UK, they are in far worse positions than America. So we know the debt to GDP levels in America, it's over 100%, right? It's huge, it's big, we get it. But in Japan, it's over 250%. This is why, to see Japan back its money supply, we would have to see gold at some crazy levels. For Japan to back its M0 money supply, they would need to see the price of gold at $27,786 per ounce. That's about a 6x from here. But look at this. For Japan to back their M1 money supply, they would need the price of gold at $260,000 per ounce. Similar story with their M2 money supply. You'd need to see gold at $298,000 per ounce. China, for example, similar situation. They need gold at $579,000 an ounce to back their M2 money supply. And the UK, our good friends in the UK, they would need gold at $379,000 per ounce to back their M2 money supply. Again, what do we always say on this channel? This is not a political channel, but we always say that the country seeing the most political craziness and out of control governments, this is all an economic function. Again, all of these countries, think about it. Canada, the UK, Australia, Germany, Spain, all of the countries with the most amount of debt, they have the crazy policy. There's no coincidence why they're all implementing digital IDs and advancing their plans to roll out a digital currency, a CBDC. It's all because they are economically unsustainable and they're in a lot of trouble. If you're going to print so much money it's going to make the eyes bleed, you need to come up with so many excuses to distract the masses with. Again, what do they say? If you give the peasants bread and circuses, they will never revolt. And now, while we're talking about revolts, I want to talk about a little bit of a twist on this gold revaluation theory, okay? So we all know that the markets have been suppressed for some time. This here is a 1974 declassified document from the CIA. This was originally released in the WikiLeaks saga. Again, so many people completely forget about what WikiLeaks exposed. Everybody's more focused on what the island guy said in his emails more recently, but without getting myself in trouble, let's look at this declassified document. We can see very clearly the volatile price movements would diminish the initial demand for physical holdings and most likely negate long-term hoarding of gold and silver by US citizens. And you can see very clearly these banks, this is a London bank and an American bank talking to each other. We can see each of the dealers express the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. So they're openly talking about how they would use the futures market to suppress the physical price of gold and silver, and this would, in their very own words, diminish hoarding. It's kind of insane that, again, they've been admitting the quiet parts out loud for decades. There has very obviously been some sort of suppression game on gold and silver, but now it kind of begins to ask the question, okay, if America does revalue its gold, what is it going to buy? Would it, quite simply, just pay off its $38 trillion of debt? I'm personally less convinced. I'm more interested in looking at what the biggest suppressors of gold and silver are suppressing right now. So I found this headline, and again, this is all coming out in the last couple of days of February. This is insane how these headlines are just knocking over each other like dominoes. But I saw this. Jane Street has just recently become the biggest dealer or trader of, you guessed. Now what's super interesting about Jane Street is they are now the single largest holder of the silver ETF SLV. And look at how much and how quickly their dominance in this specific silver ETF has grown. In Q4 2025, they went from owning 41,000 shares of the SLV ETF to owning 20 million shares of SLV. They are the single biggest holder. And what else has happened interestingly lately with the silver price? Silver saw a 41% correction in one day. That is supposed to be like a 10 standard deviation event. It's supposed to never happen in the history of history. And again, we've got to really start asking ourselves the question, is Jane Street manipulating the price of gold and silver? Because on the day that I'm filming this, the CME saw another major outage just as the price of silver started to reach a very critical level for traders. And we know that Jane Street is now the single biggest dominant player in this space. And what else is really interesting about today in particular, I'm filming this on Wednesday, the 25th of February, and Jane Street literally deleted all of their tweets today on this very day. And the reason why I'm so focused on it is because they are getting sued by a company called Luna. Now, again, this is super interesting for anyone holding gold, silver, or Bitcoin, because we know that Jane Street's been manipulating the price of Bitcoin since October 2025, they were and have been one of the biggest reasons that most people have been speculating about that caused that flash crash on October 10th in the Bitcoin space. And Bitcoin's dumped from 126 to 60. And then all of a sudden this week, we got some new information from a lawsuit that is alleging that Jane Street has actually been manipulating the Bitcoin space since 2022. Jane Street deleted their Twitter account today. And the reason why Jane Street deleted their Twitter account today is because they just got accused in a new lawsuit of manipulating the price of Bitcoin and actually blowing up a cryptocurrency called Luna back in 2022. And this triggered like a domino effect of bankruptcies in the Bitcoin space. We saw Luna go bankrupt, FTX go bankrupt, Celsius and BlockFi all go bankrupt in 2022. And we also know, we have public knowledge that FTX was literally shorting Bitcoin every single time it got above $20,000 in 2022 by yours truly, Sam Bankman-Fried, who he and his girlfriend, Caroline, both worked at Jane Street. So again, if you're holding gold and silver, you should be paying close attention to what Jane Street is doing. I want to talk a little bit more about this gold revaluation and I think suppression mechanics that is going on in a moment in a little bit more detail. First, let's talk about solutions. I don't want to talk about doomerism for the whole length of this video. What can you do if you are holding gold and silver? What can you do if you do think we're going to see a revaluation upwards to $20,000 an ounce? First thing you can do, get the physical stuff. So I went and bought some physical silver the other day, just a little bit more for a prop in videos because I don't hold anything on me. But again, if you are a gold and silver bug, highly recommend you actually hold the real physical thing, because again, this is the reason why these big banks were able to create 200 or even 300 times worth of paper contracts for the one physical ounce. I'm not so certain that you're going to be able to profit from it unless you hold the physical. And again, this is why I'm such a big advocate of Bitcoin. Less than 10% of the 21 million Bitcoin is actually on exchanges today. So the ability for these big banks to manipulate the price of Bitcoin, it decreases when you actually take self-custody of your Bitcoin and you put it in your own physical USB. Again, if you guys need help taking self-custody of your Bitcoin, reach out to my partner at The Bitcoin Way. You can book a free 30-minute consultation in the link down below if you do need help taking self-custody of your Bitcoin, because this is how we beat the big banks. This is how we beat Wall Street. You take self-custody of an asset that they do not control. And I can guarantee you one thing, governments are going to want more and more control over our assets in the next 3, 4, 5 years. This is a reality. They're coming. More recently, we might have won in the Netherlands when they proposed that 36% unrealized capital gains tax. They did recently withdraw that, but I think all of these Western governments, they've played their hands. They're coming to tax your gold, silver, and Bitcoin out the wazoo, and they're not going to slow down. They're not going to stop. If they're talking about 36% unrealized capital gains taxes, that's going to rise, and you're going to see a lot of Western countries follow this path. This is, again, another reason why I tell you, yeah, buy some Bitcoin, but a better way to get your hands on Bitcoin is to actually mine it. Again, a lot of people, they buy Bitcoin from a centralized exchange like Coinbase, Kraken, or a Gemini, and they give over their passport and their identification to an exchange that shares it with the government, and the government is just going to come after your Bitcoin because now they know how much you own. Mining Bitcoin is a little bit of a solution to that. If you are interested in learning more about how you can mine Bitcoin and passively just accumulate more and more coins, reach out to my friends at Blockware. They will be able to help you out with everything you need help with over there. And now that we've talked about solutions, again, Bitcoin in self-custody, gold and silver in self-custody, what do I think comes next? I think the blatant manipulation in the gold and silver market is a sign that they're losing control. It's very clear gold and silver is flowing out of bullion banks. I personally think that this decorrelation between gold and Bitcoin is super interesting. For years, gold moved first and Bitcoin kind of played catch up 180 days later. But I think Jane Street's outright manipulation in the Bitcoin space is a little bit of a warning signal that maybe there could be a connection there. You know, again, this is the question. If America's going to revalue its gold and it's worth $5 trillion or $10 trillion, what are they going to do with that money? Are they really just going to buy back the debt and pay off the debt and say, you know, we balanced our books? I'm not so sure. I don't necessarily think that's the type of thing the US government would be doing. Again, I think they're probably more of a risk taker, and maybe I see them revaluing gold and maybe doing what is in a law right now that's in Congress in America. That is the Bitcoin Act, where they're openly advocating for revaluing gold to buy Bitcoin. So if you enjoyed this one, again, make sure you subscribe for my next deep dive. If you want me to dive into this idea in more detail, leave me a comment down below and tell me what you want me to cover in my next video. But with all that said, I'm going to leave this one here. I'm going to encourage you once again, self-custody your money. You should never be trusting these bankers. I'll see you on the next one.